Hey everyone, Kevin here. I just want to make a quick note on some of my favorite parts of Warren Buffett's shareholder meeting yesterday. I watched every single minute of every single word that Warren Buffett said, and I want to give you the most important parts of it, the most important lessons, and most importantly, I want to figure out, does Warren Buffett think the market's going to crash big time again? That is, are we all doomed? Is that why he's got so much cash around, or what the heck is going on, and what are the best parts of everything that was said? Well, here it is. Let's just get right into it. Basically, Warren Buffett looks at America as a moving train. That moving train derailed in 2008, the Great Recession. It crashed. That's bad. Well, now we sort of got a shock in that we kind of picked the moving train up and took it off the tracks and put it on the side. In other words, we're dealing with another shock, or what he calls a test to the United States economy. In fact, he goes back to the first sort of tests, the big tests that the United States had within the last 100 years was, well, right after the Great Depression. In fact, he says if somebody invested $1,000 in the stock market right when he was born, it would be worth just $170 2 years later. In other words, it would have lost 83% of its value. But had somebody just left the money there, today, that $1,000 would be worth over $170,000. That is, every single $1 invested in that moving train would be worth over $100 today. And this is why he really opens up with this big belief in, as long as you believe in America and you believe in the direction of the train, get on the train. There's no reason not to be on the train. The best way to get on the train, though, is the least expensive way. Hey, look, you know what? If you're a genius stock picker, he says, go for it. But for most of us who don't have the time or the knowledge to pick stocks, hop into the train of an S&P 500 index fund. For example, and this is me saying this, you could pick up a Fidelity Total Stock Market Index Fund called FSKAX. Now, that's the sort of acronym or symbol for it. It's not as pretty as like a Vanguard one. But basically, a Fidelity Total Stock Market Index Fund gets you really low fees, and you could use that, or you could buy into that with like M1 Finance or Chase U Invest or many different platforms. It's easy, and you get a whole slice of the entire market, kind of like what Warren recommends. But let's forget about this sort of background stuff. Let's focus more on the crash stuff and what the heck is going on. Basically, Warren Buffett says, hey, look, at a time like this, you don't want to be investing in things like treasury bonds, even though he's got a ton of money in cash and equivalents basically being treasury bonds. He says the long-term money that you're gonna get from investing in cheap bonds like the government bonds, very, very low, especially at a time where our central banks are taking the point of view of, you know what, we gotta do whatever it takes to print money and to support the economy. And we've been talking about Jerome Powell on this channel for a while. And that's what Warren Buffett echoes. He goes, yeah, we've got a lot of cash, but don't do it to make money on your savings. Don't do it to make money on low interest rates on bonds. There's a different reason why we have this cash, which I'm going to explain in just a second. Starts off with the excitement, nothing can stop America, but he goes on to say, hey, you know what, we're in a really weird time, that all of a sudden we could have airline demand go to zero, which basically means future airplane production demand at companies like Boeing's gonna go to zero, and auto sales are basically zero, and advertising has substantially declined. You can't help but be a little bit nervous about the situation that we're in. And when we look to what Europe did, you see that, well, you've got Mario Draghi, the European Central Bank leader from 2011 to 2019, who basically said, you know what, we're gonna do whatever it takes to support this economy. And what happened? They ended up with negative interest rates and next to no growth. And what do we have today? Well, today we have Jerome Powell going, we're gonna do whatever it takes in America to make sure we have growth, AKA print that money, brrr. And so even though Warren Buffett says, hey, you know what, just invest in an index fund, it's much cheaper than investing in some kind of brokerage where some money guy's gonna move your money around, or some fund manager who's a really good salesperson who's gonna get you to invest with them because they say they can get you a better return. He completely disagrees with all of that and says, if you're gonna give your money to somebody else, just put it in an index fund, which I have to kind of agree with. I'd rather either buy real estate myself, pick my own stocks, or throw money into an index fund, but I'm not gonna pay somebody else to invest my money. In fact, he says the most profitable part about the whole investing community is not the actual gains you make, it's being a good salesperson and getting people to invest with you, and then making money by being a good salesperson. If you happen to be a good salesperson and you happen to have some decent level of production as well, well, golly, let the riches come over to you. Go get yourself your jet, basically, in so many words. Now, here's the part where things get a little interesting. We know that Warren Buffett and Berkshire Hathaway's cash pile has ballooned. They have over $124 billion in cash and equivalents, which equivalents is just a fancy way of saying things that are like cash. Only about $20 billion is actual cold hard cash. The rest is stuff like treasury bonds or things that could easily be converted into cash. AKA, there's an opportunity, let's dump these bonds and boom, let's use that new cash that we have to go buy. So this is where the first warning comes from Warren Buffett. He says we have to prepare for everything and anything essentially, because Jerome Powell printing money as much as he is, at some point, that's going to stop. It's not sustainable to continue to just print money. This is true, at some point that will stop. And having cash is a way of insulating against the risk of the money printer stopping, so to speak. Because look, bottom line, when the money printer is printing, you want to buy things like real estate and stocks. But if the money printer stops printing, well, then you might want to have cash for some opportunities, especially if you see more of a deflationary market. Basically, prices tend to go up when the money printer's on, and prices tend to go up less fast or not up, maybe even down, if the money printer stops. So having cash prepares you for those opportunities. Now, keep in mind as well, Warren Buffett is heavily invested in the business of insurance. So it's also important for him to have cash cushions available for crises that come up. But the bigger lesson to us from his cash pile is this. He says, here's the thing. If you invested in Berkshire Hathaway and you borrowed money to invest in Berkshire Hathaway on margin, like you took out debt to invest in our stock, well, our stock went down in value 50% 3 different times. Somebody who didn't borrow money could have just bought and held through that time. But if you were borrowed or you were leveraged on margin, you might have had to have taken a significant haircut in each of those cases. And basically, that would have made your total long-term return way lower. So be very mindful and careful of debt. In fact, later in his talk, he goes into this sort of rant about this lady who was confused when she asked Warren Buffett, hey, what should I invest in? I've got some money. And he's like, well, do you have credit card debt? And she goes, well, yeah, but I want to know what I need to invest in. And he's like, wait, but what's the interest rate on your credit card? Oh, it's like 18%, but what do I invest in? And essentially, Warren Buffett says she got mad because Warren Buffett's like, lady, pay off your credit card. That is the best investment you or I could make at this point, is not paying that insane interest rate. That's just, he didn't say this word, but basically that's just dumb. And so we can circle back to what Warren Buffett thinks about cash. He sees cash as, well, 2 things. One, it is the perfect tool for growth opportunities. So if all of a sudden a really good deal comes up, he could use that cash to swoop in and buy it. But he does say, hey, look, the more cash you have, the harder it is to buy deals. For example, and this is me making this example, if I have $500,000 in cash, and a really good fixer-upper house comes up for $400,000, and it's gonna cost me $50K to fix it up, I can move on that. I could turn around, flip that house for $600,000 or $650,000. Sweet, I just made $100,000 on $450,000. I could do that in my spare time on weekends. But the problem is, when you have $124 billion of cash, it's kind of hard to go around flipping houses. He goes and does that same deal, makes the same $100,000. $100,000 isn't worth the time of a company with $124 billion. It is worth the time for all of us watching this, any of us individuals who either own a house or don't own a house yet. It is worth us investing in real estate because we can make massive sums of money with very little money and very little risk. I talk about all that stuff in my programs linked below. But the second thing that Warren Buffett says cash is so important for is insulation and risk. So one, opportunities, but for him, the opportunities have to be really large. And that's why his cash balance keeps growing. He's just not really seeing a spectacular opportunity to invest right now. And the second thing is he wants to have insulation, because the last thing he wants is some mega crash to happen and then not have cash to insulate himself to where all of a sudden they have to close businesses or sell businesses at a loss at the worst possible time. Especially since he goes on to say that, hey, look, it's very normal for businesses to die. Berkshire Hathaway used to be a textile mill. They tried for 20 years to get that thing up and running and profitable. It never worked. It never would have worked. It wasn't destined to work. That's capitalism. Businesses that aren't destined to work die. And this is partially why he's out of the airlines, which I made a separate video on the airlines, so I won't go deep on that. But he sees that same kind of change happening to autos, to advertising, to shopping malls. This makes a lot of sense. Retail is going to change. Office space, probably even a bigger transition that he sort of emphasized, is that people are going to realize, I don't need all of this office space. I can work from home and use the free Facebook version of Zoom and not even have to pay Zoom to teleconference. But then that begs the question, why, when Warren Buffett was asked, when the value of Berkshire Hathaway went down 30% in March, why did Warren Buffett not repurchase shares? That is, why didn't he take some of the cash he had and buy some of his own stock? Basically, if you believe in your company so much and it's 30% off, why didn't you buy more? And this is a very valid question that has left a lot of concerns. Well, his first reaction to this question, in my opinion, is the most important, because this is the first thing that came out of his mouth. His answer was, well, it was only that low for a very short period of time, roughly a day or two. In other words, yeah, in hindsight, we look and go, wait, it dropped 30% and you didn't buy? Yet when you look back, you go, well, when we zoom in a little bit, it was only there for like a day or two. You'd have to be almost kind of relatively fast to bounce on that. That was the initial first reaction, which I think is important and is going to tie into what he thinks about the rest of the market. The second reason he gave, though, is very interesting, but it only makes sense when you keep in mind the first thing that I just said. The second thing he said was he also didn't see enough of a relative discount for his company's value to buy his own company's shares based on the prices where they were now. He didn't care about what the prices were in the past. He cares about the prices now and considering the uncertainty going forward. So let me clean that up a little bit because I know that was a little bit messy. Basically, looking at Berkshire Hathaway, his own company, he had the opportunity to rebuy shares, but it was only down 30% for a very short period of time, a day, 2 days, and they didn't act on that. I imagine it probably takes a little bit more time for a large company like that compared to somebody like me who could just take out my iPhone and go, oh, I'm buying that really quick. Probably takes them a little bit more time to deliberate and decide what they want to do. I'm sure they were thinking about it, but they didn't make a decision quick enough during that time. So then you wonder, okay, well then let's go back to it maybe being down 15% or down 10% from its highs, or even down 20% from its highs. Well, between that range, that 20 to 10% discount, Warren Buffett says there's too much basically risk to say that is a good value because there are so many unknowns related to the Rona. So yeah, 30% off may have been a good opportunity, but they were too slow to bounce on that. And at 10 to even 15% off now, it's just not enticing enough to say, let's jump in on that deduction now or that discount now, given all of the uncertainty. So this is where we get to the big question. Is the market going to crash again? Is Warren Buffett hoarding cash because he sees another big market crash coming up? Well, for this, I see two possible scenarios here. Possible option number one, and this goes back to his biography, The Snowball Business Life. Anyway, I'll link that book down below. Great book. Anyway, in that, he was always a proponent of buying when he knew or could make reasonable projections about the future earnings of a company. Because of the Ronas, it's kind of hard to reasonably predict what's going to happen. It's very difficult to look at the airlines and say, okay, well in 2 years, I think they'll be back at 80% capacity. Based on what? Based on what historical evidence do we have that they're going to be back at 80%? What if they're back at 70%? Well, now that company could be losing money in 3 years instead of profitable. What if they're back at 90%? Who knows? There's nothing historical that gives us any kind of guidance. Sure, we could go back to the Spanish flu, but come on. We didn't have Delta and all these commercial airlines flying at the prices they are now with an oil crisis going on. There's so many crazy things happening right now, which oil is something else he touched on and said it's going to be years before all this excess inventory is essentially worked off. But with all these unknowns, there's too much uncertainty for Warren Buffett to establish value right now. And because his uncertainty gauge is so large, he's basically saying, I can't tell you if there's a good deal out there right now because there's too much unknown. And this makes sense. That's just option one, though. And that doesn't necessarily mean that the market's going to crash. It just means he's kind of waiting for the cards to fall where they may. Option number two, and this is a more cynical option and opinion that's floating around, is that Warren Buffett's 89 years old. If he got the Ronas, he would have some big issues. In fact, so big that the impact of this coronavirus could potentially be having a disproportionate effect on him and his investing opinion and his opinion of the future of America. Even though he's still long America, he believes that maybe the next 5-10 years might be so rocky because of this, possibly in a sort of inflated way because of his own personal age. The fact that he started out this discussion by saying, I've been stuck in this house for 7 weeks. I haven't put a tie on. It's just been a matter of what sweatpants do I want to wear today? And he's probably personally very fearful about this, even though he says he does not let fear enter his psychology when he's thinking about investing. There is the argument that this is probably the first greatest shock in Warren Buffett's entire career that is specifically targeted, almost specifically targeted, or maybe especially targeted to people of his age. That's just a second opinion. I'm not saying which one I agree with. I'm going to give you my opinions now, and then I want to hear yours. Now, full transparency, 4.2% of my investments into stocks, not considering real estate, just stocks, are in Delta Airlines. 5.1% is in Carnival, and 6.25% is in the Simon Property Group, a real estate investment trust. I have more money in companies like Apple, Tesla, JP Morgan Chase, Disney, and others. Much more money invested into companies like those. But I want to be fully transparent with some of my holdings here. So I would say based on what Warren Buffett just discussed, he probably pretty well bags on about 15% of the stocks I own, which is a very small minority of the overall portfolio that I have. But here's my POV. We had the most massive, scary shock ever to our economy and to our psyche, our own personal fear in March. Think back for a moment to the drama over toilet paper. Remember the stock market circuit breakers? Those things going off like every day? Think about how bad the news was for weeks on end in March. A lot of that was driven by straight up fear. We were utterly clueless. We didn't have any sight of a potential bottom. We had no potential treatment for this, no potential idea as to when a vaccine might happen, no thoughts about reopening, concerns that we might be on lockdown until December. For us to revisit March prices in the stock market, in my opinion, we're going to have to see a very large shock. And by shock, I mean like some very large bad information. And I'm not just talking about worse unemployment or worse GDP numbers. A lot of that's already expected. We're gonna have to have something new, like this virus mutated and things are getting worse. None of the treatments are working. None of the vaccines are working. Then I think we will see a massive recollapse of pricing. I don't believe Warren Buffett says there's going to be a massive recollapse of pricing. I think he's very conservative and is taking a very smart POV. I agree with him. It is better to be conservative. This is what I teach in my programs. The best in style of investing is being highly conservative. That's why I only buy real estate below market value. I don't buy market value real estate. I don't buy new construction real estate. I don't buy overpriced multifamily real estate. I only buy multifamily if it's underpriced. The reason is because unless I can guarantee I'm getting a good deal on something, I'm not interested in investing in it. And I believe Warren Buffett is the same. So I don't believe Warren Buffett is saying the market's going to crash again. I certainly don't think the market is going to crash substantially unless there's some really big, bad new information that comes out. But it is possible. And without a doubt, there are going to be red days again in the future. I just don't think Warren, and I certainly don't believe it myself, see another March Madness essentially happening in the stock market with circuit breakers tripping all over the place. Again, at least not for a while, or unless some really bad new information comes out. Now, I want to give you one more big piece of advice from Warren Buffett. But before I tell you that, I just want to remind you that right now is the perfect opportunity to open that description link down below. Click on the little button that allows you to get life insurance within just 5 minutes. Honestly, you can do it within 2 minutes. You can Apple Pay for it. Boom, you're signed up just like that. The younger you are, the cheaper it is. You can get a free quote. Super easy to do. Lauren and I have it. Make sure to get your 2 free stocks with Webull as well. Remember, if you deposit $100 or more, it can be more, just not less. If you deposit $100 or more, you get 2 free stocks worth up to $1,400 with the stock trading platform Webull. And then you could buy yourself a slice of the United States economy as well. Now, let me talk about the psychology that I thought was brilliant, or at least the way he described it today, because it's one that I believe in as well. Warren Buffett said that imagine you buy a farm, and every single day, your neighbor screams prices at you going, hey, I'll buy your farm for, as an example, $5 an acre. How about today I'll pay you $6 an acre? Hey, how about today I'll pay you $4 an acre? And it was something, a bottom line that I thought was so brilliant was he said, why is it that in stocks, the louder that person becomes screaming smaller numbers, the more tempted we are to sell? Think about that weird thing for a moment. Think about that. If we buy Delta stock at $25 and the next day somebody goes, I'll give you $24. Hey, I'll give you $23 today. Hey, yo, today I'll give you $13. The lower that number becomes, the more psychologically worried we are about our stock. And all of a sudden we're like, okay, I'll sell it to you for $13. That doesn't happen, for example, in real estate. Imagine that. If you were that farmer and the dude's like, I'll give you $5 an acre now. I know you paid 10. I'll give you 5 today. And then the next day rolls around. I'll give you $2 an acre. Come on. The price keeps going down. You may as well cash out now. We as the landowner would look at that dude going, dude, you're nuts. You're out of your mind. Like, thanks for letting me know a price quote, but I don't care. I ain't selling. It doesn't matter. Your opinion of what I bought doesn't matter. The only thing that matters is my opinion of value in what I bought. And that's exactly what Warren Buffett says and preaches. The only thing that matters is your opinion of the future cash flows and prospects of a company. And if you don't know how to analyze the future prospects and cash flow of a company, buy an index fund. And of course, my course is linked below. Thank you all so much. Make sure to subscribe. Really appreciate you all being here. And folks, we will see you next time.